it is really important to say no more often than you say yes. There are more bad deals than good deals. And I think for most entrepreneurs, they have a hard time with what I think one of the most important aspects of being an investor is.
Representing Franchise Secrets, Erik Van Horn. Justin, welcome back to the show. It's been way too long, man.
Yeah, I was thinking about, we were talking off air. I just love, our talks. I just love getting together, chit chatting. We don't always know where we're going to go, but the conversation's always fun. Like I leave and it's, I feel intellectually stimulated, and sometimes it's just fun to have a regular cadence where you can just keep diving into some of the things that you want to keep up on, some new things. So yeah, I'm excited. I'm always down to hang.
We need to do it more often. And one of the things I've realized is and I'm sure you've seen it even more than I have. I mean, you've taught me so much about investing, tax strategies, asset allocation, passive income. You've taught me more than anybody. But now it's second nature. It's like, oh, this is just normal. But then I start to get
Yeah.
in other groups or even in really smart groups, and it's not second nature to them. And so even for me,
Right.
on this podcast, I'm like, oh, everybody knows about, this strategy, solar strategy, whatever it might be, or the things more, or sometimes more importantly, the things to stay away from,
That's right.
the traps out there. And so I
Traps,
think,
bad
yes,
actors, and legislation that changes, right? So you have to stay on top of, like solar credits have been awesome, and I'm still doing them this year and I love doing them, but they extended that bill, so instead of it ending, I think in September, now it's going to end in December. So it's like, yeah, I mean, this year's still prime for that, but next year that this strategy may not be as lucrative, right? Or I mean, based on the legislation, it's not going to be as lucrative.
yeah, it's important to stay on that stuff. I just did a session for the franchisee mastermind and the franchisor mastermind. I had Jess Weaver, my personal CPA, come in and kind of give an overview of the big, beautiful bill. You and I and Ryan Casey did a really deep dive in the tribe of
Yeah, we
investors on
did.
that with this guy that was incredibly brilliant, and like he was blowing all of us away. But I was on this franchisee mastermind call, and one of the former members of the tribe of investors was in there, and she's been part of your ecosystem for a long time. And she had a question for Jess, and hey, what about the solar stuff and how's it going to change, my, because I've been getting great tax credits and whatnot. So she was talking about that, having this higher level conversation in that franchisor group. And a lot of people didn't even know that something like that existed. She didn't know something like that existed until she was in the tribe
That's
with
right.
you and I. And that made me think. And so I sent her a text, and I said, how much money did you save? She said, a good 50,000 plus 15K over the next couple of years paid out to me. And then she said the bigger project, the more saved, but the 25% on the money for her is a great return on tax money. So so it made me think, like, she was in the mastermind,
Yep.
got this, more than paid for it with this one strategy. And
Just
then
one,
this
which is
thing,
crazy. I love
yeah.
it.
And then it's paying dividends. So it compounds, like the things that
Yeah.
you learn just compound year after year. Everyone is looking for, what is my ROI in the next 12 months? And that's not necessarily the right way to look at it. You need to look like, the decisions that I make today, the things that I learned today and can implement that make me X amount of money over the next 12 months. What does that look compounded over the next 10 years?
Yeah, I think that's a super wise way to look at it. And I think you're talking about Kristen, who I adore. She's wonderful. Just I think the world of her, and I love hearing these success stories of members that implemented something that we taught, but it didn't just save them that year. They used it the next year, and the next year, and the next year, and the next year, which is so cool. But yeah, you're right. There's a total compounding effect that happens, and I look at it from two different, I mean, really three different arenas. The first one is the easiest ROI is always tax strategy because you can get that immediately inside that year. And then that gift keeps giving to future years. So that one easily compounds, right? But then you have the education. What you learn now, you can use that for the rest of your life. So, like, what if you got 1% smarter every single year? And a lot of people make a much larger leap than that. That informs your future decisions. I mean, there's a huge compounding effect on the education when you bring in world class people. And that's what we focus on is best in class at whatever the thing or issue or topic is. And then the deals, sometimes with the deals, you get, said return over the course of the period, that hold period. But then when it sells, there's a big return there. You get capital back, you get a return on that investment. And so you might make an investment 1 year and it pays out on year 3 or year 5 or year 7. And access to that deal may have gotten you another deal or into another fund, or being able to double down and invest in a second round or a third round, just preceding rounds. So yeah, I think a lot of people look at it linearly, where they say, hey, a mastermind is X dollars. It's going to cost me this. So in order to justify it, I need to make this inside of that calendar year. I think that often happens. And generally for us, tax strategy alone, it's very rare that a member joins and the tax strategy from that year doesn't cover that year's tuition, right? But what I think most people don't look at is kind of like the exponential portion of it, where you have so many future returns on the information, the education, the tax strategy, whatever it is, that just compounds. We have people in our community, in both lifestyle investor and tribe of investors, that learned one thing, and that one thing, I mean, Ryan Thacker is a great example of this. He's like, I'm a lifetime member. You taught me one thing in year 1, that one thing saved me literally like decades of what it's going to, what the tuition to join is. So I'm a lifetime member. And every year he's gotten at least one of those. And it was really cool because we did a podcast and he was like, yeah, if I just add up the 3 strategies or the 3, technical shifts that I've had, that, it resulted or yielded material difference. He's like, it literally covers me for a lifetime.
I want to get into some. The reason I wanted you on originally was to talk about like this one deal that you brought to lifestyle investors and early on, and it's had gigantic outsized returns
Yeah,
compared to what you saw on paper at first. And there's other deals that have had the same types of terms, the same types of return that this one showed, but they had normal returns, which are still strong returns, but not outside. So I want to get into your mind on something like that. But before we do that, you mentioned something about like one of the values that you get being a part of a mastermind or just getting involved in deals, good sponsors, is you get introduced to a sponsor, they're going to have another deal and another deal and another deal. And so you get into that ecosystem, and then you get to learn about like investors in that good ecosystem with good sponsors, which by the way, not easy to find good sponsors,
that's
but
right.
once you do, like that is an incredible ecosystem to be in because there's still people that were part of lifestyle or tribe that are not part of it anymore, but they're still have these relationships and are still getting into great deals because they got introduced to great sponsors. It made me think early on, before you even started the mastermind, before you even had your first call pitching the mastermind, there was a deal that you were, just talking about, and I did the deal, and the deal didn't work out, but it did work out. And what I mean is, I did the deal because of this one thing. They said, if the deal does not work out, we will give you your money back. I'm like, I like money back guarantees. Like, that is great. And I vetted it. I looked, and it's like, has that happened before? Not very often, but has it happened? Yes. Do they pay out? Yes. So that's the reason I went into that deal. Is this group has a lot of success. And so I went into that deal, and well, this deal was not the greatest deal at this point in time. Things might change, that thing might just, go to the moon, but right now that deal is not where I wanted it to be. And so I sent an email and said, hey, I want to execute this money back guarantee that you gave me. And they's like, here's what it is, here's what you do, and here's how you get your money back. And just like they said, I got my money back. And so when I tell that story to people, they're like, a money back guarantee from a sponsor? Like, that's amazing. I've talked to different people with that same sponsor, that same group that put that one deal together, and they're making great returns on other projects that this one
Yep.
that they're in. So those two things, one deal didn't work out, didn't lose money on it. The deal's not losing money, but it wasn't return what I wanted. I got my money back, and they honored that, and they still have a bunch of other deals that are outperforming. And so I'm like, that is a sponsor that I'll go into again. So just as you were on sponsors, it made me think about that, and finding the great ones is a needle in the haystack, but you have a knack for finding them.
Well, thank you. And some of it is, what we haven't talked about, when I think about like the return of investment in a mastermind, I actually think the greatest return is the network, the relationships. And I would kind of tier it. I would say, there are different, like if we broke it up, I'd say the member relationships. I would say the preferred vendor relationship. So, best in class in, estate planning, best in class in tax strategy, best in class in CPA and tax filing, best in class in, whatever the thing is, 1031 exchanges. We could go on and on and on. Best in class in whole life. Uh, Having those preferred vendors, and then having top tier world class sponsors being part of that too, right? And then your world class educators. So it's like four different groups of people that you get access to that have been vetted, that can really move the needle, because I think relationships do it all. And then I think people often don't realize how much negotiating power they have as an investor, especially when they come in inside of the lifestyle investor community, because we have purchasing power. We have a lot of people that they want access to. They want our capital, but would they see us as smart capital? So having the capital is important, but having the relationships beyond the capital that can help these companies, in many cases, is even more important. And so we're able to leverage that, and that's how we're able to get really cool things like what you were talking about, is a put option, right? A put option for a certain amount. I invested $250,000 into this deal. I want a put option that I can get $250,000 out of this deal at any time. Uh, uh, and if I don't take it, I'm riding, the same terms, the same results, the same splits. And if not, I can pull the exit, hatch at any time and get that capital back in case there's, a life circumstance, a situation, money's tight, business is in dire need of a cash infusion, whatever it is. And that's one of my favorite mechanisms to put into a deal. You can't always do it. Not everyone agrees to it, but we've had tons of people agree to it, and it has proved to be a really great strategy inside of our community.
Let's talk about, well, no, before we talk about that, just well, two things. Masterminds in general, I'm a huge believer. I had a friend of mine in franchising that's on the franchisor side of things, and we were talking. He's like, Erik, let me pick your brain about masterminds. And this guy's brilliant, because this is a guy that I want to pick his brain on franchising, because he's so smart. He's done a ton. He's had a number of exits in different brands, and I love the guy. Very, very smart. But he's like, I'm thinking about doing this mastermind thing, because he's in some other masterminds. He got introduced to the mastermind concept about a couple of years ago, and he's like, this is brilliant. Erik, you're doing it on the franchisor side and the franchisee side. I'm like, yeah. So I told him what I'm doing. He's like, this is what I'm going to do. He's going to be charging $50,000 a year. I charge $500 a month. He's charging $50,000 a year. He's giving more value for his thing. I've had franchisors reach out to me and like, hey, Erik, I want to join your mastermind. Do you do X, Y, and Z? I said, no. Why don't you go to this other thing? Why don't you go over here? Because one of the things that you want before you get a coach, join a mastermind, have an advisor is make sure that they have your best interests in mind. Always,
Totally.
period, end of story. Most aren't like that. But you need to find somebody that does that, or a group that does, and it has that culture, because there's nothing better in it. So I'm imagining after this podcast, I'm going to get franchisors reaching out to me and being like, Erik, I love you. I love your podcast, but I want to pay $50,000 to this other guy that can help me in a different way. But I'm a huge believer in it, and I think he's going to be incredibly successful with it. But it also made me think about the you and I were, and Ryan Casey were on a Tribe of Investor session yesterday, and I casually mentioned I'm going to Europe with the family for 3 weeks coming up here in September. And all of a sudden, someone else is like, "Hey, I'm going to be there," and I'm like, "Where are you going to be?" This is all side conversation, Justin, that you didn't see, because it was
That's
just me
awesome.
with different people. And they're like, "I'm going to be in the Interlaken region in Switzerland with the same time you're going to be there, so I'll probably see him there." It would not
That's
surprise me.
cool.
And then somebody else was like, "Hey, I've been over here. I recommend this. This is a great restaurant. 3 great restaurants in Paris, hotel here, hotel in London. This is where you should stay in Rome. This is what you need to do." And so, like, there's all these, you need to have these types of relationships. And as a matter of fact, one of my Joe, my franchising friend who's been on the podcast here, who finally joined the tribe, he's like, I got a friend from Orange Theory that they took their family on like a European trip, and then that was like 2.5 years ago. They're still on this trip, and so he did an
Wow.
introduction, and Joe's like, "Where are you right now?" And they're like, "We're in Bali for the next few months."
It's
And
so
so
fun.
I just love groups. Point of all of this, franchisees, franchisors, if you don't have a world like this where you have these types of connections, you can have high level conversations, you need to get in a group like that. It doesn't have to be a paid group, but you need to be around people that are pushing you and are peers, so you can just get better. So that's kind of my whole point in that. Justin,
Yeah.
if you weren't joining a mastermind, like, to pay for a mastermind, what would you do to just be in a better group around better people?
Well, I mean, I think there's something to be said about paying for access, paying for being able to pay to play. I think that's important. I think there's a lot of ways you can do it. I think, on the lower levels, it's books, it's podcasts, it's setting up coffee or breakfast, lunch meetups with people that are playing the game of business and life at a higher level than you. But I really believe everyone should be in a mastermind. There are masterminds at all different price points. There are all different, types of specialties. To me, you had said this before, where you're totally comfortable like recommending someone else's mastermind. You and I, we don't see other masterminds as competition. We see masterminds as a whole, as the more of them there are, the better it is for people, the better it is just for the world of masterminds themselves. And so we're often referring people into different masterminds. But it's interesting. I think most people are not in a mastermind, and I think if you are wanting to level up in any way, that's the easiest way to level up. These relationships are priceless. The education is priceless. It's intellectually stimulating. There are a lot of partnerships formed. There's new creative ideas that you may not think of, but you could hear it, know it, recognize it. This could have a huge impact in your business, or to start a side hustle, and you could implement it right away. And so I just think everyone should find the group at whatever the price point is that fits your budget, because you can always upgrade later. And I think for those that are not in masterminds, get in a mastermind. For those that are in masterminds, like, all entrepreneurs should be around other entrepreneurs, right? Like that's just plain and simple. And you want to get around entrepreneurs playing the game of business of life at a higher level that can help you scale, help you do all these things. But what I think most people like do when they are in masterminds is they stop there. They keep it business focused. And I'm just so excited that we can have a place in our mastermind communities that focuses on the thing most don't focus on, which is wealth creation, passive income, financial freedom, tax strategy, all these things. And we still talk about scaling businesses, how to exit right, how to build the value greater than where it is today. But and then having all the resources to help you have an exit, to help you scale the business, to help you grow your wealth. and not just grow it, compound it, right? Have exponential compounding of that. And so I think people often miss the boat, staying too niche down. And I think the way to get ahead is to join the groups where people are playing the game of wealth creation at a higher level, passive income at a higher level, because that changes the game. Once you buy your time back, whether you have a W-2, and you're in corporate America, or whether you have your own business, but maybe you're a slave to that business. Maybe you work more hours than you want to work, or there are things that you're doing that you probably shouldn't be doing. Based on the time value equation. Is it worth your time? Could someone else be doing it? I think once people recognize that there are these other masterminds out there that can help you level up, it is a game changer. You own your time. You make better decisions in your business. You make better decisions for your family. And I just think the script flips of what you say yes and no to. You have higher quality, not just life and lifestyle, but like higher quality problems that you get to deal with, that you get to solve for. You get to be more top down in the business. You get to be more top down from a strategy standpoint. You can get to pull yourself out of the weeds of just focusing on the top 20% of activities that generates 80% of the revenue, and thus 80% of the profit in your business.
What Justin didn't tell you is he pays a lot of money every year to be a part of a lot of different masterminds. I don't pay as much money or am in as many groups, but I do. Most recently, I paid a little bit of money. I think it's like $300 a month to be a part of an AI mastermind.
That's
I
cool.
cannot make any of the meetings. So I cannot make any of the meetings, but I do know there's gold in there. And I just go and I'll listen, I'll read, I'll get the replays, and I will learn, and then I will share. Like
Yeah.
that's the value for me. Do I wish I could be a part of the live ones? Yes, but that's okay. I know the value that's going to bring. And then so that's paid, little bit of money paid. But then what I did is I want I want to be around people in franchising that are utilizing AI at the highest levels.
Yeah.
So I sent a text to the smartest guy that's the most well-connected guy in AI and franchising. And I said, hey man, is there a group that meets to talk about AI and franchising? He said, no, but I would love one. I'm like, well, I'll create one. And
Mhm.
so it's me and him and two other people that are doing things in AI. By doing things, they're just not out there posting things online or making content out of it. They're not doing that actually. They're not doing that. They are
They're
spending
implementing.
20 hours a week implementing it into
Yeah.
their business to make their businesses more efficient, more successful, and doing things more than I'm doing in AI. So I'd never like to be the smartest person in the room. If you're the smartest
Great,
person in the room, you're in the
great
wrong room.
rule. Oh,
Yep.
that's awesome. I'm the same way. Great
Yeah,
rule.
I know you are. I know you are. And so like I created my own little mini mastermind, and you don't have to be the smartest person. You just have to be the one that organizes it.
Yeah.
Um,
Get around them.
yep, get around them.
Attention, franchisors and franchisees. There are two really important resources that I want to share with you that will help you avoid costly mistakes and increase your enterprise value. The first is our free Facebook group. It's a community that has over 4,000 franchisees and franchisors in it. When somebody asks a question, they get honest and authentic answers from multiple perspectives. You can join the group for free over at franchisesecrets.com/Facebook. The second resource I want to share with you is if you're a franchisee and you want to be around a community of successful Zs and other brands and in other industries, this is why I created the Franchisee Mastermind. If you want access to the best single and multi-unit owners to know what they're doing, or if you want to be around other multi-brand owners, then you'll want to check out my Franchisee Mastermind. The reason why people join is they want access to my Rolodex, my connections, to each other. They want a shortcut success, both short-term and long-term. Links will be in the show notes or at scalablefranchise.com.
All right. Back to the main topic. 22 minutes later. you were talking about one of these deals inside Tribe of Investors Lifestyle Mastermind that outperformed, like way outperformed the projections. And so every deal that you get across your desk, because you see so many different deals, and you have a way to do a quick glance and get rid of a bunch of them, and then do deeper dives and deeper dives after that. And you have, you put a lot of time and money and resources into that, by the way. But a lot of times the deals look the same. You can have a deal that shows you a certain percentage of return, certain kind of, deal structure, waterfall, money along the way or whatever. It looks the same because that's what the sponsor gives you. That's what the person looking for the money is giving you. But on the back end, you only know what how that compares to like an um, actual returns when the deal's actually done or going full cycle or close to going full cycle. So talk to me about that. This great deal that's outperformed, and then how it may have looked the same as other deals. Like what separates them?
Yeah. I like to start first with it is really important to say no more often than you say yes. There are more bad deals than good deals. And I think for most entrepreneurs, they have a hard time with what I think one of the most important aspects of being an investor is. Uh, Entrepreneurs are the eternal optimists. They're going to figure out a way. They're going to rally the team. They're going to hire who they need. They're going to cut costs when it's time to do that. They're going to try creative solutions. They're going to have different ideas. They're going to pivot their business. There's just so much of a glass half full type of mindset, and when entrepreneurs take that into investing, I think they get taken advantage of. I think they, um, it's funny. Most entrepreneurs go into investment saying, "Hey, this is a good deal. I think this is a good deal. Let me see if there's any reason why it may not be a good deal." And that's the worst way to show up. I want to be the eternal optimist, but from an investment standpoint, if you just start every deal with this is a bad deal, there's a 96% chance this is a bad deal, right? Because we know that inside of 5 years, only 4 to 5% of businesses succeed. Okay. So let's just start there. Let's just call it 95% of deals are bad deals. Then if you say, hey, this is a bad deal, unless I can prove otherwise, well, your filter now changes and you'll say no to more things. And that's what you want. And you want to say no quicker. You don't want to waste time on deals that you don't want to do. So it's interesting, like even as the Lifestyle Investor Mastermind has evolved and as Tribe of Investors has evolved, we've always done a high level of due diligence, and we continue to upgrade that process. And so early days for me, I didn't have teams that helped me. I did everything myself. Now, any deal that ever makes our platform goes through, we spend about $300,000 to $350,000 a year on our due diligence process and our vetting services. Some are in-house, some are external. But we've got great partnerships and relationships that provide these incredible due diligence documents that one can help make good decisions, but two can help people learn how to become a good investor with questions they would likely never ask themselves, never think to ask. Right. I'm really proud of what we have built, and with the success rate, I mean, we're still operating at about a 94 to 94.5% success rate in the deals that we've done since inception, based on what's gone full cycle and what is tracking positively at or above the pro forma. And so, we're really blessed from that standpoint, which is great. I feel like God's really blessed our business and our investments. And I think that, the proceeds should also be going towards a source of good and impact and all that, which we get into at some point if we want to. But yeah, I think if we can shift to, the funnel, the top of the funnel is the biggest. And then as you work down and get smaller and smaller, and what deals actually make it? Well, whatever people put on a deck, whatever people put, in their pro forma, that doesn't mean that's what's going to happen. That's just what they're putting. And almost everyone has similar numbers because they know that to attract the investment dollars, they need to be in a certain range for what the IRR, the internal rate of return, is going to be on a deal. What the preferred return, which is the money that's paid out to investors first before sponsors get to share in the proceeds. And so you can have two deals that have identical terms, but there's so many other things that are different in the operating agreement or in the subscription documents, and you really have to get an education there. And this is why we love teaching it. We love teaching people how to invest. So, at first we just provided deals that I was doing, but we learned that the better thing to do is to teach people along the way so that they themselves can figure out how to vet deals. And if we want to transition into this company, we don't do a lot of early stage stuff because it's a high percentage of failure. The earlier the business, the more likely it is to fail. Early stage company, you're probably at a 99.9% failure rate, right? So we try not to do too much stuff early. There have been a handful that I have, and part of the reason I do them is I love to study data, and I look at the trends of where things are going, and I like to identify opportunities that aren't mainstream yet that I think will go mainstream. And so I think if you have those tailwinds, it really helps out. And so this deal with Guardian Bikes. I was so pleased. I'm friends with one of the founders. I'm friends with both the founders, but I'm really close with one of the founders. And, I heard about this. I heard about their proprietary brake technology that makes it impossible for someone to flip over the handlebars with, using those brakes. No one else has that. There are patents all over worldwide. And then I knew that their goal was to bring manufacturing back to the US. And this is before, the administration was, really moving in this direction. And so they got an early start with it. They moved their factory and production all here inside the U.S., just outside of Indianapolis and in Seymour, Indiana. And they're booming. They've got these 8 massive facilities, warehouses. And by the way, it's not even enough. Like they've got to grow to about 1 million square feet to be able to do everything they want to do. But I also noticed that no other bike manufacturers are manufacturing inside of the United States. So every big brand that is doing all their manufacturing offshores, generally in China or Taiwan or one of the countries where you can do it with much cheaper labor. And so, I saw that as an advantage. They were incorporating AI and robotics even into things that have never been done before in the bike industry. Having robotic arms that can weld a bike together in 12 different locations. It's just incredible. The paint machines that they have, and it is mind boggling what they're doing. And so, yeah, we got in early. We got in when they were doing, somewhere around about 10 million revenue a year. And I let people know, hey, this is earlier stage than we normally do. It's riskier than we normally do. But, and if you invest in it, plan on losing your money, right? You got to go into it with that mindset being this early on, just because that's what the odds are. But, it's nice having Mark Cuban as, an advisor and investor. These guys were on Shark Tank and blew it up, which was cool. It's given us some good FaceTime with Mark, which is neat. He was just at our big grand opening. And I'm so proud of the Guardian team for all they've been able to do. All the people like heads of state, White House representatives, people there running, the state of Indiana. It was powerful. And Mark was just so cool, so down to earth, just totally will. And I know he was slammed. I know he was doing a million things. Like he literally, I'm just shocked he had the bandwidth to come, because I know this is small potatoes for him, but it's such big potatoes for this company and the people on board, the employees, for the state of Indiana, for the city of Seymour. And he stayed, he talked, he hung out, he was there so long, and it was cool. I'm just, I'm just blown away. And it's cool seeing a company that when we showed up for an investment, 10 million in revenue, and I think they're, projected to do, I think they're right now at like 150 or 60 or 70 million. in revenue, and they're just taking the world by storm. And this is even before some of these tariffs officially go into effect. I actually think that there's a world where the bikes all end up being the same price, except that Guardian is literally like 10 times as good, but the price in the bikes is negligible. So it's really cool and delivered right to your doorstep. You don't have to go to a store. It's so customer service friendly. Yeah, I could go on and on about the company, but it's cool getting a chance to connect with Mark Cuban and getting a chance to connect with Kyle and Brian, the founders, and just watch all the cool innovations that they're doing and the way that they're scaling the company.
I guarantee you did not talk politics with Mark.
Well, we got into actually we did a little panel at that event where we got into it because we had some political figureheads there. And so we had a tariff expert, we had someone in government for the state of Indiana, and then we had Mark, and then we had Brian, who is one of the founders of Guardian, all on stage discussing it. So we actually did get into it, and it was really a fun debate and a fun discussion. And it's great when you have such strong differences of opinions that but still with a high level of respect for each other.
So this deal is way outperforming what you originally thought. So
Yeah.
let's dive into like some of those reasons. So some of it might be luck, some of it might be
Oh,
timing, and
luck's
some of it
always
might
yeah.
be yeah,
Hmm.
and some of it might be like, oh, let's dive into the founders before we get into some of the other things. So, like, what did you learn about the founders since you put the original investment in terms of their character, their leadership, their ability to be teachable? What was it about these founders that you think helped them grow a company like this?
Well, first and foremost, they're high integrity. They always did what they said they would do. The way they show up, the way they treat their employees, the way they paid them during hard times, like all the stuff. Like they and they just their character is so strong. Secondly, is their um, ability to innovate, strategize, see the future, make moves towards it. So they actually take action really fast instead of just talking a big game. And I love that. And number three, they're workhorses. They will put in the time, they will put in the hours, and they will outwork many other founders. And so, I believed that they were the right ones. And it's cool because this is their first, real company. So it's not like they had a proven track record. But I do think one of the things, I can identify often when I meet with people, because at one point in a past life I hired and trained a lot of people, so I feel like from the interview process to the training process to leadership development, I just had a lot of interaction with people, and I really feel like I can sniff out most times someone that can't walk the talk that they're saying. And so I will just not get involved. Right. But I also think I can then find the ones that will do it, that they are being, honest and upfront about their skills, their abilities. And I also like knowing when people are vulnerable enough to say what they don't know or where they need help, and that they're willing to ask for help. And I've been able to, leverage a bunch of connections, even in this investment, to connect them with people that have helped them with financing, connect them with people that, even JP Morgan and, their $16 million partnership. And, the list goes on and on. But I, I think the world of these guys. I think the world of Guardian Bikes, and now I think the world of Mark. I just was really impressed with him.
Do you think the company would be where it is today if Mark had not gotten involved as a shark and had not invested the time into the founders and into the company like he did?
Well, I think they would have figured out how to be successful. I think even without Mark, they would have done fine. It would have been a much slower go, and they probably would have made a lot more mistakes along the way than what they have made. I think Mark has been incredibly influential to open doors. He's been incredibly influential to pony up capital, extra capital, when and where it's needed. He was very wise and advising them not to take a large equity investment from a group that he didn't think was a good fit, that he didn't think was at a good valuation, that they may have otherwise taken. So yeah, I think, Mark's the accelerant, right? Like um, he cares about the people he works with. He is so fond of entrepreneurs. It's what he is, it's who he is, and I think that he really takes a lot of joy in that mentoring role and helping, advise along the way. So there's no doubt that it is night and day difference with his involvement. But these two founders, I think, would have figured it out. It would just be a much smaller growth J curve.
This is so interesting because this is what we talk to franchisors about all day long at Front Street. They're like, we're smart, we got a good widget, we got a good mousetrap, we can do this. And we have no doubt that they can do it, but they don't know how to look around corners. They don't know what decisions that they could make that could be bad ones that could hurt the business. Again, taking on the wrong capital, listening to the wrong advisor. And then at the end of the day, like what you said, it's speed. Like Mark was able to get them quicker because making the right decisions at the right time, the right mentorship, like you get to $160 million in revenue quicker with Mark than without him. Would they be successful without him? Yes, but
Mhm.
that's the thing. So when you bring on an advisor, you give up equity. You want everything that Justin just described that Mark was able to bring. Manufacturing. What was that? Was that
Real quick, before we get into manufacturing, I also want to say, just because you bring on an advisor doesn't mean you're going to get that. You actually need to know that the advisor has a track record, that they're reputable, that they're high integrity. I can tell you countless situations where people hired the wrong advisor, someone that didn't have the insight, or someone that wasn't willing to leverage their network, or someone that was more selfish and cared about them and their return than the overall company. So I do think you have to be careful who you pick and be wise with that arrangement. But obviously Mark has a great track record, and it's very open to the public eye. It's like you know it, but a lot of people, they don't have that public persona, so you may not know, and you really need to do some digging and do your own homework to diligence them to make sure they're the right fit.
it's the same thing. Like we talk to brands all day, every day, and we're like, you need to research us. This is what we say we're going to do. Talk to the brands that we've worked with. Did we deliver, under deliver, or over deliver? And I
Hmm.
think people will find that we over deliver. We talk about all the time. We are in the trenches. You're going to get us on the weekends. If you need something, like your problem's our problem. We're in it with you.
Yeah,
So it's great to have the right advisors, because just like sponsors can promise the world on a piece of paper, but you need to vet them, validate, and whatnot. All
that's
right,
right.
manufacturing, luck or strategic or a little bit of both?
Well, I would say it's definitely a little bit of both. I mean, they made the decision to move manufacturing to the US before it was ever a big push by the current administration. So I think they made the move about 3 years ago. And so this would have been, there would have been no tailwinds at that point in time. And in fact, I think there was even concern at that point in time because it'd be way more expensive if they didn't get the level of volume that they needed to hit for it to make sense. So like it was a big risk. And now they have the headwinds of a pro manufacturing administration that is really kind of paving the way for them. I mean, it's cool. They flew the founder out to the White House to spotlight Guardian, to say, hey, look, this company is bringing manufacturing back to the U.S. So they're kind of like a poster child, one of the poster children of the current administration, which is incredible. But they would tell you they had no clue that this was coming up. They had no clue that there was anything, with tariffs that could help support what they're doing, or that that there could be some of the subsidies in place, or these cities that were willing to really help make this a win-win. And then really a lot of the reason that they even got the factory that they have, I mean, this massive 8 building um, uh, headquarters is because of the relationship they had with some of their investors, because it was their investors that really helped bring this into fruition.
So I know you're not the guy that swings for the fences. Like every deal
Nope.
is going to be a home run. You're
Nope.
good with singles and doubles and triples and home run's great, but we're talking about a home run here. But just give us like your overall philosophy on just investing in general. Like while this home run is awesome and there's reasons why it became a home run, that's not what you're going for.
Yeah, I mean, I'm always happy when a home run comes around. This one actually feels more like a grand slam than anything. But most deals aren't that. And my goal is to really invest in a way and educate people about investing in a way that the single family offices do. So what does that mean? Well, a single family office is a group of people that basically run the estate and the investments for billionaires. And so I just read a report today from Campton Wealth that said that the average single family office, it was I think it's $7.4 million a year to run a family office at that scale. And so most people don't have the resources to do that, and that's why it's kind of, a single family office is the class of the billionaires, right? But that information is not readily democratized for people like you and me. And so I love digging into this. I love getting the data. I love studying it. I love copying what they're doing, because there's a reason. It's not like luck that, all these billionaires are billionaires. There is a playbook. They do things differently. They do things differently with tax strategy, which we bring to our community. They do things differently with their investments, which we bring to our community. And we actually get access to a lot of the deals that they do. Their asset allocation, so how they spread out what percentage of their net worth they put into different deals, and we bring that to our communities shared. And I just think that's the way to go. And so, if you look at, this is still so comical to me, and we've probably talked about this before, maybe not, but Wall Street obviously wants your money, right? And the whole financial planning, advisory, institutional world, they want your money, and they live on an old, flawed model of diversification is a 60-40 split between stocks and bonds. That 60-40 asset allocation is dead. That does not work anymore. Maybe that worked for a period of time. I mean, your family offices will tell you they've outperformed that through and through. But Wall Street decided, hey, we're going to label another category, like all these other investments that aren't with us. We're going to call them alternative investments, meaning this is a small alternative to what most people are doing. And the comical thing is, amongst the billionaires, it is actually 50 to 60% of their net worth. So it's not an alternative. It is a primary. This is their primary investment vehicle. And if you break it down even further, you generally only have about 15 to 25% of these billionaires' net worth that's actually in the stock market. That's it. You've got generally 30 to 40% that's in private equity. You've got 5 to 10% that's in private credit, maybe up to 15% for some families, but call it 5 to 10%. And then you've generally got 10 to 20%, sometimes 25% in real estate. And so if you look at, the playbook of what the wealthiest people are doing, it is actually not what you are likely taught or what your financial advisor is doing for you. And that's the most interesting part of it all. And part of the reason that these billionaires have money in public equities is, in the stock market, is not just do they believe that the U.S. economy is going to grow. I think they do, but it's that they can borrow against it to buy more alternative investments, to buy more private equity, real estate, private credit. And so think about this. If you sell a stock, you have a capital gain. If you sell it in less than a year, it's a short-term capital gain. If you sell it after a year, it's a long-term capital gain. So two different tax rates there, long-term obviously being better. But if you don't sell them and you just borrow against it with margin, with a conservative amount of margin, Well, now it's a non-taxable event, and you have capital to be able to invest in other things. And that's what the wealthy people do is they utilize other people's money and vehicles um, that give access to their own assets and resources to be able to purchase other assets that will grow in value.
Same thing, franchisors. You could have a liquidity event where you sell to private equity. Or you could do something like what Justin was just talking about, how the single family offices do it in the world of investing, where you can take some debt on your business as not a taxable event, and then you have liquidity while keeping the business. Multiple different ways to do it. Well said about like the single family office asset allocation. I think if there's a takeaway, want to get your final thoughts on that, but there's a takeaway from this, diversify, but look at what the single family offices are doing. Learn that. You can learn so much of that from Justin. Justin's got one of the best podcasts in the world. You got to check out the Lifestyle Investor podcast, get the Lifestyle Investor book. Just get in that community. There's a free community. Just go to lifestyleinvestor.com and get involved in a lot of the free stuff that Justin does. And I think my thing with the single family office, with the billionaire sitting by the pool, he's not investing emotionally. He's got a team around him, a criteria that they have for him or her to invest that family money. It's not like they don't even probably see it as their money. It's like a business. It's the money that they are managing, and they have a team of people doing it. So it's not an emotional investment like what so many entrepreneurs do. Justin, any final thoughts?
Yeah, I mean, I would just say take some sort of action today to move towards the life that you really want. What is one thing you can do today to get into community with people playing the game of business, life, and wealth creation at a higher level, and pull the trigger. Make an investment into you. It's funny because no one thought twice about paying for college. No one thought twice about paying for maybe it's additional schooling, maybe it's a different major, maybe it's an MBA, maybe it's a doctorate. We're all comfortable investing into ourselves, whereas now it's actually one of the worst investments you can make. You see college graduates having one of the worst hiring seasons that we've had in a very long time. Yet, as we get older, we often forget that the best place to invest is in ourselves and into our peer group and mentorship. And so I would just think back to that and just say, hey, if you want to level up, get around the people that have leveled up. And it doesn't have to be in the Lifestyle Investor Mastermind or Tribe of Investors Mastermind, but it should be somewhere that fits your budget, fits your time frame. And keep in mind, it only takes one mindset shift or one deal or one relationship or one strategy that can totally change your world. Yeah, if you want to learn more, go to lifestyleinvestor.com. We have all kinds of resources from courses to masterclasses to masterminds. The book, is continuing to, I mean, it's the top 1% of all books ever sold. Number one Wall Street Journal bestseller, USA Today bestseller. The updated and expanded edition is out. We're working on our kids' book. Our children's book should be out here in about a month. We've got our live event that we were trying, next week that we were trying to get it out for, but we're actually doing all kinds of cool stuff with that beautiful, big, beautiful tax bill there and passive. It's actually our passive income live event, that is kind of the theme of it. So we're thrilled about that. And anyone that really wants to figure out what their next steps are, we do these $500 consultation calls where we, kind of help create strategy for people on what would be, next best thing to do. And if you want access to it, anyone in your ecosystem, we'll do it for free. So go to lifestyleinvestor.com/consultation. We'll do a free call with anyone that has interest in learning what they could do next. And yeah, just happy to be here with you. Thanks for having me on.
Well, I have one thing to say before I let you go. First, I mean, two things. First, you've taught me so much. You've helped out so many people in franchising as our worlds collided a number of years ago. But I'm I'm a little disappointed that Alex Hormozi kind of has more book sales than you do. So I'm so excited for you to have a new book launch for your newest book that will probably, beat the world record that Alex Hormozi just set. So any plans?
That number is crazy. Hey, we just want to get the book out to as many parents and kids as we can. It appeals to younger kids and older kids. We got 2 different paths. And we're just thrilled about it. What Alex has been able to do is incredible. I actually just got his book. It's behind me. Our goal isn't number sold. Our goal is impact. And we built this, we've written this book in a way, my COO, Ryan Casey, and, dear friend and runs Lifestyle Investor and Tribe of Investors with us. He and I co-authored this book, and I'm so proud of it. And it just, our goal is impact, and it's geared towards a way to even help parents as they're telling the story, because a lot of parents probably don't know these 40 lessons that we're going to go through that are built off of my original 10 commandments. So, yeah.
Last thing, when you are looking for a mentor, you're looking for somebody to learn from, make sure you fully align with them. There are people out there that are promoting the hustle culture. Alex is one of those. Gary Vee is one of them. They are amazing at that. And if that's you, you should go all in. If you value something different than that, look for a different person that you are really wanting to model your life around. Justin, thanks again, my friend.
Yeah, thanks, Erik. And just so your audience knows, I've learned a ton from you as well. I've learned a ton in the franchising space. I've gotten into franchising, having confidence because I know that you've got my back and I can learn a ton from you. So I want your audience to know how awesome you are, how high integrity you are, how much you've shared with me and taught me over the years. And even in some of our, interesting situations with partners and home office franchisor side of things, you've been very instrumental. So thank you.
Thanks for listening to the Franchise Secrets podcast. Links to everything can be found over at franchisesecrets.com. And if you want my help with anything from starting your own franchise to growing your current franchise business, please visit scalablefranchise.com.